It gives a very great overview of where we are these days. We are still in the early stages of digitalization, but as you can see on this particular slide, the building blocks via numerous evolving digital technologies are in place. But the challenge we have is to digitally replace what's estimated by the ICC to be 4 billion pieces of paper that circulate in the trade world currently. And that amount of paper is not reducing, actually. At the G7 conference last year, they identified that digital technology is at the heart of building back better from the pandemic, and it will play a very vital role in improving the internet safety and transforming the economy. And one of the key interventions that they identified was greater adoption of electronic transferable records. And they agreed to look at the legal and regulatory barriers which are preventing the use of these electronic records in order to make the necessary savings. And that's one of the things, and one of the main things I'm going to look at in this presentation. Moving on, I think we're at a very unique place at the moment. We're seeing, as I put there, a synchronicity between 5 different pieces of technology. The technology itself, the platform providers, market practice, law, and ICC rules. Now, all 5 of these have been working with each other in different bits and pieces over the last few years. But finally, they're coming very much together, looking at enabling interoperability. Lots of people have spoken about digital islands and digital silos in the past, and that's always been a problem. The fact that everyone's getting together now means we can start connecting these digital islands and overcoming a phrase which I love, because it just shows you the apathy we see sometimes, overcoming the inertia of tradition. In the past, many things are done because that's why we've always done it. The fact is we have to go past that. Just because we've always done it that way doesn't mean it's the right way. Again, on this slide, I've highlighted 3 particular events which I think are very important. 5 years ago, and it's a very quick 5 years now, July 2017, Ontitrol released the model law on electronic transferable records, or is known as MELITA for short. This enables the legal use of electronic transferable records both domestically and across borders. Then 3 years ago, the ICC released the ICC e-rules, the EUCP and the EURC, and these are supplements for electronic presentations under documentary credits and collections. It's a kind of step along the way. Under the EUCP, you can present both digital and paper because that reflects where we are in this current world. And in October last year, the ICC released the uniform rules for digital trade transactions, and these are meant to serve as an overarching framework for digital trade transactions. Now, very quickly, for those that were involved in the last call, you are aware of this, but I think for any newcomers, it's worth giving an overview again of URDTT. As I've mentioned, they came into force last year in October, not even a year old, very close, but so they're very much in their infancy. And at the inception of the drafting process, the drafting group was given a strict mandate to develop a high-level framework outlining obligations, rules, and standards for the digitalization of trade transactions. This was and is the purpose of the rules. Now, this work's now been supplemented by a commercialization substream. This was established last year. It has cross-industry representation, and we have people from all the key trade regions involved. This group's examining both the ICC e-rules, which I've already mentioned, and the URDTT, and developing a framework to evaluate the challenges and ideas to drive the commercialization and adoption of the rules forward. So far, the rules have not been used as much as they should have been. URDTT is understandable, it's brand new, but the e-rules also have not had that much usage. So the idea, this will result in a comprehensive plan and recommendations to be published later this year. In the meantime, there is an implementation guide to the URDTT that has already been published by the ICC. And this guide looks at various generic themes which you need to take into account when utilising the URDTT. It looks at things such as the buyer and seller agreement, legal issues, which I'll touch on again later, technology requirements, and the usage and examination of electronic records. There's also a very comprehensive section on operational issues, and it's very obvious if you need to understand URDTT, you do have to have a clear understanding of the applicable operational issues to be observed. So what is a digital trade transaction? You'll see it on the left there on the screen. It's a process, as agreed between the buyer and the seller, whereby electronic records are used to evidence the underlying sale and purchase of goods or services and the incurring of a payment obligation. And in order to be subject to these rules, a digital trade transaction must specifically state so, and it should satisfactorily reflect the underlying commercial contract. And as a matter of course, and in order to allow for the necessary examination process, which will be digital and online, it must specify the terms and conditions by which compliance of an electronic record will be determined. So but many of you have already heard this piece, but that gives you a background into the rules themselves. Now, moving on to the Electronic Trade Documents Bill, which I mentioned, legislation is underway in the UK to implement an Electronic Trade Documents Bill. Now, whilst this may look like a very small piece of legislation, it's actually, we believe, a game changer for world trade. Much of world trade is underpinned by English law. That's a legacy of the UK's historic role in trade. So you can see there in September 2020, the Law Commission were asked to make recommendations to solve the problems caused by the law's approach to the possession and transfer of electronic records. And the current law in England and Wales doesn't actually recognise the possibility of possessing electronic documents. In simple terms, if you have paper, it's tangible, and the law recognises tangible, but it doesn't recognise digital, which is seen as intangible. And that's what needs to be changed and what is in the process of being changed. Now, the ICC last year, I think it was late last year or early this year, did release a paper in conjunction with the Centre for Digital Trade and Innovation, which Chris will talk about later on. And the intent of this paper is to explain how the URDTT are compatible with the proposed legislative changes in England and Wales with regard to the use of possessible electronic documents as set out in the UK Law Commission recommendations. Now, with these recommendations, they noted, the Law Commission noted that possession is central to the use of trade documents across various jurisdictions, in fact, probably all jurisdictions. And efforts to address this possession problem that I mentioned and digitalised trade documents are reflected in many initiatives that are ongoing, both internationally and in individual jurisdictions, with the aim basically to legally recognise the use of electronic documents. And in developing their recommended reforms, they've been very mindful, given its international significance, of the United Nations Model Law on Electronic Transferable Records, which I mentioned earlier, the MILITA. And their recommendations, the Law Commission recommendations, do align with the aims and policies of the MILITA, but they're actually tailored specifically to the law of England and Wales. And I can speak a bit about that later. But to see the synchronicity here, the URDTT definitions, the ICC rules, are also modelled on MILITA. So you can see already how we're moving towards each other here. Key takeaways of the Law Commission report. As previously mentioned, the Law Commission were asked to make recommendations to solve the problems caused by the law's approach to possession and the transfer of electronic documents. And they also they also asked the Law Commission to prepare draft legislation to implement these recommendations. Now, these recommendations of the Law Commission and the forthcoming Electronic Trade Documents Bill are not predicated on the functionality of any particular technology. Instead, they ask, as a matter of law, what features must trade documents in electronic form have in order to be equivalent to paper documents and therefore amenable to being possessed. And similarly, the Uniform Rules for Digital Trade Transactions are also agnostic in nature with regard to underlying technology. And they basically address the gaps in digital trade, focusing on the use of data in digital trade transactions. Trade documents may be required to be signed in order to be validly issued, and the MILITA itself makes specific provision to allow for the signing of electronic documents. However, the Law Commission believed that the law of England and Wales is already sufficiently flexible to accommodate electronic signatures. So that piece may already be in place. Quick question on what do exporters and financiers need to know about this Electronic Trade Documents Bill and about the Uniform Rules for Digital Trade Transactions. I've mentioned earlier that a digital trade transaction is a representation of the underlying transaction, and it's the process by which the terms of the commercial contract between the seller and the buyer are recorded and progressed. So as a key issue, it's essential to identify the benefits for each party, what they'll obtain by taking on a totally digital process, things such as standardization, access to trigger points for financial service providers to provide risk mitigation, settlement, financing, etc., etc. Now, these things need to be made clearer to each party within a transaction. Just to let you know, the uniform rules themselves provide for the information traditionally covered by a paper document to be replaced by data in an electronic record. Looking at policymakers, obviously they're going to have a big role to play here, the regulators. In order to qualify as an electronic trade document, a document in electronic form must contain the same information as would be required to be contained in the paper equivalent. And both the Uniform Rules for Digital Trade Transactions and the Law Commission recommendations for the future Electronic Trade Documents Bill actually already cater for this. Documents that fall within the scope of the Law Commission proposals may have a requirement that they must be in writing. Now, unlike the Melita, they do not include an explicit provision in the bill which allows for electronic documents to satisfy in writing requirements. And again, this is because they believe the law of England and Wales already defines writing in broad terms. So as such, they think the position in our domestic law is already clear. A trade document in electronic form can satisfy a requirement to be in writing. Looking at the Uniform Rules for Digital Trade Transactions, these highlight that unless applicable law requires otherwise, the requirement that information should be in writing is satisfied when an electronic record containing such information is accessible to an addressee and is not affected by any data corruption. And this reflects one of the objectives to the Melita, which is to enable or facilitate the use of electronic commerce and provide equal treatment to users of paper-based documentation and users of computer-based information. Very quickly on the benefits, I mean, most of these are obvious anyway, but as I've mentioned already, much of world trade is underpinned by English law, this legacy that we have of our role in trade. But this extends not just across the Commonwealth, but for every buyer, seller, insurer, financier, logistic player, any kind of intermediary that uses English law as a basis for contract law or handling trade documents. The bill definitely will have a disproportionately large and positive impact on global trade at a time when we need it, with high trade costs, suffocating under a mass of paper documents, etc. And this proposed legal reform will not only benefit the Uniform Rules for Digital Trade Transactions, but also the other ICC rules I mentioned, such as the EUCP and the EURC, whilst at the same time providing support to the trade industry to make the necessary strides forward in terms of digitalisation. The Uniform Rules for Digital Trade Transactions already provide for submission of electronic records rather than presentation of paper documents, and they focus entirely on a digital environment, which allows the involved participants to submit and share information and data digitally. They're always independent, they're neutral, and they provide a collective understanding of all terms and definitions. And very importantly, they align with the framework for G7 collaboration on electronic transferable records to promote the adoption of legal frameworks which are compatible with the UNCITRAL Melita. The rules, they augment the avoidance of repetition with platform rulebooks, and at the same time promoting and supporting the usage of electronic records. Very importantly, they do not prohibit or constrain the continued use of existing policies and are designed to provide a structure under which other rulebooks can coexist. Now, the Commission recommendations, there's 27 of them, and 8 other issues. Some on the right-hand side, you can see the other issues there. The 27 recommendations, you can look up on some of those links that I've mentioned there. I'm not going to go into all of them. We don't have the time, and we don't need to today. I'll just take a few that I think are key issues. The first one is recommendation number 1. Trade documents in electronic form should be capable of being possessed as a matter of law, provided that they meet certain criteria, which ensures that they can replicate the salient features of paper trade documents. When we look at the Uniform Rules for Digital Trade Transactions, this is there. It's stated within the articles of the rules. And they provide that where the applicable law requires or permits delivery, transfer, or possession of an electronic record, that requirement or permission is met by the transfer of that electronic record to the exclusive control of the addressee. And exclusive control itself is functionally equivalent to possession of a paper document. So therefore it meets the criteria for possession as defined in the Law Commission recommendations. The next one I'll mention is recommendation number 8. In order to qualify as an electronic trade document, a document in electronic form must contain the same information as would be required to be contained in the paper equivalent. Again, if we look at the Uniform Rules for Digital Trade Transactions, in view of their neutrality, the rules can be easily assimilated into the underlying commercial contract between a buyer and seller, and that avoids the requirement for paper processing, provided both parties agree to use digital records and are transactions subject to the URDTT. Electronic records or electronic documents, whatever you want to call them, will be submitted to either evidence the underlying sale and purchase of the goods or services, or evidence the actual delivery or receipt of those goods or services. And in respect of the rules, the underlying contract between the buyer and the seller requires agreement by both parties on the actual electronic records to be submitted, by whom they are to be issued, the data content, and the time frame in which they should be submitted. Moving on to recommendation number 10, sorry. In order to qualify as an electronic trade document, a reliable system must be used to ensure that the document contains certain functionality designed to replicate the salient features of a paper trade document. Again, if we look at the URDTT, this fits in very nicely with the Law Commission recommendations. The definitions of the URDTT define a data processing system as a computerized or an electronic or any other automated means used to process and manipulate data, initiate an action, or respond to data messages in whole or in part. And if you looked at the ICC publication about implementing URDTT, it mentions that it's essential that internal data processing systems can handle the relative formats for electronic records, as well as authenticate messages and execute electronic signatures. And this publication, by the way, which can be downloaded free from the ICC, also outlines the minimum standards for data processing systems. But once again, the model, the electronic trade documents bill is going to come in place, and the Uniform Rules for Digital Trade Transactions do match each other. Recommendation 11, very quick one here. In order to qualify as an electronic trade document, a document in electronic form must be protected against unauthorized interference or alteration. And the rules already have this by stating that an electronic record must remain complete and unaltered. Jumping to recommendation 17, in order to qualify as an electronic trade document, the trade document in electronic form must be capable of being uniquely associated with a person or persons able to exercise control of it. And the rules within the definitions state that an electronic record must be capable of being authenticated as to the apparent identity of a submitter and the apparent source of the data contained in it, and as to whether it has remained complete and unaltered. So again, the compatibility is in place. Recommendation 26, the existing provisions on electronic presentment of instruments in the Bill of Exchange Act of 1882 should not apply to electronic trade documents within the meaning of the bill. And in respect of bills of exchange, as part of a digital trade transaction, although they're not specifically covered by the Uniform Rules, this will be decided by market practice. The fact is that a payment obligation under the Uniform Rules for digital trade transactions that meets the provisions of the Bill of Exchange Act can be treated as a bill of exchange. So no problem here at all. So that's looking at the key recommendations. I want to look at some of the other issues that they've raised as well from the Law Commission. First being the technological neutrality. The recommendations of the Law Commission and the Electronic Trade Documents Bill are not predicated on the functionality of any particular technology. They do not suggest that any requirements of the bill can only be met by one particular type of technology. Basically, they aim for recommended reforms to be able to accommodate future technologies. And again, this matches with the URDTT. The mandate of the rules is that the rules would essentially be agnostic in regard with to an underlying technology, and the choice of technology platform or messaging standards is agreed separately by the buyer and seller. It is actually recommended that both these parties transact on the same platform. However, if not, it should be agreed by the buyer and seller how they actually work together. And it will depend on the actual terms and conditions of the digital trade transactions. Practical issues such as interoperability would actually require attention in those cases. Again, refer to the ICC publication implementing URDTT. This does provide a guide to the recommended content for the commercial contract between the buyer and seller, as well as the recommended terms and conditions that should be included in a digital trade transaction. The buyer and seller, I touched on this already, they must agree on the actual electronic documents to be submitted, by whom they are to be issued, their data content, and the time frame in which they are to be submitted. This is actually very important and worth repeating. One of the other issues which I touched on earlier in writing, documents that fall within the scope of the proposals for reform may have a requirement that they must be in writing. Unlike the Melita, they do not include an explicit provision in the bill which allows for electronic documents to satisfy in writing requirements. And this is because, as I said earlier, it's believed that the law of England and Wales defines writing in broad terms. And they did a lot of further research on this. It does suggest that electronic displays are likely to be considered to satisfy an in writing requirement. So as such, they think the position in our domestic law is already clear. A trade document in electronic form can satisfy a requirement to be in writing. Looking at the uniform rules for digital trade transactions, this highlights that unless applicable law requires otherwise, a requirement that information should be in writing is satisfied when an electronic record containing such information is accessible to an addressee and is not affected by any data corruption. And this reflects one of the main objectives of the Melita, which is to enable or facilitate the use of electronic commerce and provide equal treatment to users of paper-based documentation and computer-based information. The next one is signed. Again, I mentioned this briefly earlier. The Melita does make specific provision to allow for the signing of electronic documents. But as the Law Commission actually relate in their own report, the law of England and Wales is already sufficiently flexible to accommodate electronic signatures. And they believe that electronic signatures can be used to sign electronic trade documents without the need for an express statutory provision. Looking at the rules, they don't actually contain any substantive requirement that an electronic record should contain an electronic signature. And the only reference to an electronic signature is contained in one of the articles where it states that if an electronic signature is used, it must be in compliance with any conditions specific to that electronic signature in the digital trade transaction. One more requirement is sets of documents. Quite an interesting one when you compare paper to digital. It does remain common practice for some trade documents, especially bills of lading and bills of exchange, to be drawn in sets of 2 or sets of 3. However, there's no actual requirement for these documents to be drawn in sets, and they therefore don't believe, or the Law Commission don't believe it's necessary to include a requirement that the system on which an electronic trade document exists must make this possible. If we look at the URDTT, we point out that while originals and copies have less relevance in our digital world, the rules clarify that any requirement for submission of one or more originals or copies is satisfied by the submission of one electronic record. In essence, it's actually a technology issue because technology already exists to make this possible, to have originals and copies. But to be honest, in my opinion, in practice, the need for sets of originals is probably negated with digital original records anyway. I don't think it really fits into the digital world as it did in the paper world. And one more extract from the Commission's report. In developing their provisional proposals for reform, they've been very mindful of international initiatives and similar reforms in other countries, particularly the Melita. and they consider that the overall approach of Melita is sound in principle, and they've sought alignment with these principles as far as possible. And just to talk about the rules again, to show the comparison, they are also modelled, the definitions within the rules are also modelled on Melita. So what is happening elsewhere? It's worth looking at this. There is so much happening. If we look at the Melita itself, that's already been put in place in various countries, such as Bahrain, Abu Dhabi, Singapore, and a few others. Only 7 or 8 at the moment. I can't remember the exact number. In the US, there's a very recent initiative there. In July this year, the Uniform Law Commission passed several amendments to the Uniform Commercial Code. And these address digital assets, terminology to account for digital records, electronic signatures, and distributed ledger technology. They're providing rules for electronic negotiable instruments and clarifying the rules for applicability to hybrid transactions involving both goods and services. So there's a lot going on there. I will stress that this the Law Commission recommendations there do still need to be taken up separately by state legislatures, but they are moving very quickly in the US. In the EU, we know they're very concerned about fragmentation there. So the G7 members are reforming laws. They're also actively trying to find a pan-EU solution. I've mentioned India on this slide, because I know a lot of us in trade transactions deal with India. And the Information Technology Act of 2000 in India, as far as I understand anyway, grants legal recognition to electronic documents and lays down broad contours for ensuring the genuineness and legal acceptability of electronic documents. The presence and content of an electronic document would appear, therefore, to be legally recognised, and a bill of lading in electronic format does satisfactorily meet the stipulations in their statutes. So very positive in India. In China, they're doing a lot of work on this. They're rapidly adopting various inter-trial model laws, and the ICC China has an industry task force that is up and running. The Chinese government itself is actively looking at what the legal barriers are in Chinese law and what the solution should be. So again, we can see a lot of progress there. As a separate point, I want to mention up a point that Chris Laufer said earlier this year. I think it's still very, very valid. He was speaking about the big point around English law. And he was saying the big point about English law is it's not about England. This is about English law and its role in trade worldwide. And with the Commonwealth countries using the same pieces of centuries-old foundational law, such as the Bill of Exchange Act and the Carriage of Goods by Sea Act, they should theoretically be able to adopt this new bill wholesale or with minor changes. So the potential is actually there to accelerate legal reform faster than any other global network. And I'm sure Chris will probably want to say a few words on this himself later. So just another couple of slides from me. I just wanted to mention the ICC Digital Standards Initiative, DSI. This has been established, been brought into place to establish a globally harmonized trade environment to address challenges and bridge digital standard gaps. And these gaps include a lack of coherent standards for developers and executives and policymakers, legal uncertainty regarding the acceptance of digital trade documentation, platform rulebooks that are actually hindering cross-platform title document exchange and utilization. It's looking at unclear requirements for foundational trade standards and insufficient standards to simplify blockchain and non-blockchain based integration. There is a website for the ICC DSI, and I do recommend you take a look at it because you'll see how much is actually going on. There is an awful lot there. And then the final slide here is one where I'm going to pass over to Chris now on the C4 DCI to have a few words.
Thanks, Dave. Thanks, Dave. I was busy scribbling in the chat room there while Dave's talking. It's quite interesting kind of patterns that are developing on this legal reform. I suppose got two hats in the context of this conversation. My day job is Secretary General of the International Chamber of Commerce here in the UK, and with that, the ICC Centre for Digital Trade Innovation. But I'm also the co-chair for the Legal Reform Advisory Board at the Digital Standards Initiative, the DSI. There's a lot of momentum around this legal reform agenda, as Dave has just set out. Our expectation at DSI is that we will have 100 countries committed to aligning their legal systems to Melita. The lion's share of those will be all the 86 countries that are part of the WTO e-commerce negotiations. There is a clause commitment in that agreement when it's signed off at MC 13, it will be. So that's very, very exciting. So there's no getting away from the fact that this is happening, and we shouldn't try to pretend this is one or two countries. This is all the big economies and a whole swathe of the world right behind it coming down the pipeline. So now is the time, in other words, to start preparing, start getting familiar with the technology solutions that are out there and begin the process, because it is pretty complex and it's not as simple as flicking a switch. So I'm here to talk about the centre in the main. I think it's worth just highlighting the sort of macro framework here, which is the ICC Digital Trade Roadmap. In that roadmap, which was published in 2017, we set out 3 pillars of work. And at the time, all we had was the Melita framework, which is kind of interesting compared with what we have now. But in those 3 pillars, the first pillar is all about laws, reforming the laws, as Dave is saying, remove barriers so we can digitalize commercial documents, number 1. Number 2, align our legal systems to the global framework, Melita. The second pillar is all about standardization. And that today is the ICC WTO standards toolkit. That is the definitive framework that sets out what interoperable standards we need to adopt and where in the system. That's an absolute game changer. It is the Microsoft Apple moment in trade, where those 2 companies came to a sensible agreement, standardized their document systems, and suddenly we were able to transfer documents across both Apple and Microsoft. And anyone old enough to remember will know how painful that was before. Well, that's the cusp of where we are in trade. And obviously, in our consumer lives and work lives, we've seen the benefits of what happened with Apple and Microsoft, and that's the kind of stuff. Hence, the economic case for digitalization is so big. The numbers are huge: 9 trillion across the G7, 1.2 trillion across the Commonwealth. So the DSI pillar 2 was all about standards. Pillar 3 is all about implementation, and that's where the centre comes in. So for us, we've been working on legal reform for the last 4 to 5 years. We've now got the Electronic Trade Documents Bill. We are about to change English law. That's terrific news. We now have the standards toolkit, and I should mention, obviously, the rules framework, URDTT. That's key. That sits alongside the standards toolkit. Then comes the big question. What is the mechanism to implement these global frameworks at pace, at scale, at national level? That's the critical exam question that everybody is going to get to if they haven't done already. So that's the first exam question. And the second exam question is, what's the market failure in terms of why isn't this happening anyway? And in our view, that's a coordination failure in the market. There is no entity that enables government and industry, all sectors involved in trade, to come to the table and be able to implement the frameworks at pace, at scale. So in short, the purpose and the mission and the rationale behind the centre is exactly that. We put our hand up to say we will create the centre because we're neutral. We're not a national body. We're not a government. We have no axe to grind. We just want to promote open systems, a standards-led approach to world trade, and be technology agnostic and impartial to all parties involved. So that's why it's the ICC Centre for Digital Trade Innovation. And then the forum that we've created is the platform by which all the actors can come and align and coordinate activity. There is no shortage of activity going on pretty much in any country these days on digitalization agenda. The issue is more around alignment, coordination, shared learning, shared practice, and bringing that pool of knowledge and expertise so that we can learn from what we're doing and accelerate what's working, not just in our national level, but collaborating with our international friends and colleagues overseas. The centre is a public-private partnership, as I've said. There are 4 government departments involved in the centre, all the key departments you would expect around the trade agenda, including our HM Revenue and Customs, our UK Department for Customs and Revenue. In terms of what we deliver, you're going to see announcements from us in the coming weeks, but from our perspective, we took a pretty comprehensive approach. We stood back and said, what is the basic minimum service offering that we need to provide to help enable and empower the market to drive that transformation that we all want to see. And that, broadly speaking, fits into 4 buckets. First of all, education. How do we tell the market, instruct the market, inform the market of the opportunity? So we have campaign capability. We'll be launching a national campaign focused initially on the adoption of legal entity identifiers, that pillar, that cornerstone of future digital trade, where we can track and identify and verify all the actors, who owns the goods, what are the goods, who's paying for the goods. Those very, very practical kind of questions that can all be done, click of a button on the Global Register, all fully transparent. So that's crucial, but pretty much no one is using them outside of listed companies and financial institutions. So we've got quite a mountain of education to climb to kind of inform everyone on the benefits, because the benefits are huge. The lack of awareness is the issue, we think. So that's what we're starting with. Secondly, around education is training. We know clearly there is a skills gap out there. We are encouraging companies, particularly SMEs, to skill up their workforces. So we're going to be launching training courses, basic 101s to begin with, and then more sophisticated training to follow in simple things like legal entity identifiers, how to handle digital documents, which companies or solutions providers are out in the market. How do you do this on a very, very practical level? The second bucket is around testing systems. You can't just flick a switch and go digital. It doesn't work like that. Traditional trade, we kind of all understand, tariffs, quotas, the usual kind of frameworks that we all operate in and have done for long time. Digital trade's a bit different. It's about connecting systems. It's about adopting those interoperable standards. It's about making sure that documents, whether they're bills of lading, bills of exchange, customs documents, whatever they are, can flow seamlessly through those global value chains, including with governments, end to end across multiple jurisdictions, if necessary. To do that requires some testing to see what's working, what's not. Are all the actors in that value chain capable? Are there any issues involved? So in our case, we're focusing on Singapore for the simple reason that the UK-Singapore governments have a digital economy agreement. That's the global gold standard on all digital agreements worldwide. It gives us the framework. We're the delivery partner. The IMDA is our counterpart in Singapore. That's where we start. But it's not really about value, volume of trade there. It's about precedent and about developing a global playbook for all pilots worldwide. So we all follow, broadly speaking, the same approach. We can benchmark what's working, and we're measuring key indicators predominantly around speed, cost, and simplicity. Those we think are absolutely crucial to this in order to persuade companies to adopt. We're also launching an accelerator program, what's called a needs accelerator. That's a pre-pilot program to help companies investigate what's getting in the way of digitization and what are the possible solutions. So we're encouraging companies and parties to undertake those sorts of exercises. We can help. We have the capability to do that. And then immediately, once we know what the solutions are, we lock into pilots and drive on and test systems. Singapore, by the way, is just the beginning. Once we've done the Singapore pilots, we're locking straight into all the trade agreement corridors that the UK government is agreeing. In every digital chapter of every trade negotiation, Melita is in there as a basic minimum requirement. So the aim is to work with the US, Australia, New Zealand, and everyone else that we're agreeing trade corridors with. The third bucket is around legal assistance, very practical. That's in partnership with the DSI Legal Reform Advisory Board. In our case, we have a particular strength, I suppose, to David's point around English law. 54 countries share almost identically the same English law framework. That's the Commonwealth. And so our view is we can actually really help accelerate. In my view, I think we can accelerate legal reform faster across that 54 network in the Commonwealth than anywhere else in the world, for the simple reason that we can probably just copy and paste the Electronic Trade Documents Bill, or at most with minor amendments. It's a far faster process than having to start from fresh with every different legal system. And then the fourth bucket, which is really important, is about sharing best practice. And that's all about working with the global community. bringing in the lessons of all the pilots and activities, the rule books, the application, the implementation, what's working out there, what can we accelerate, what's not working as well, where are we failing, if you like, put it in those kind of terms, how do we progress and how do we do that with all our international friends and colleagues. The Centre is by no means the only initiative that's popping up. They're popping up in all sorts of jurisdictions. Dave mentioned China, but Germany, US, France, Togo, Benin, Netherlands, China's been mentioned, Thailand's another one, Singapore, obviously, they are all over the place. And that's a good thing, because that means that we're starting to build a network of industry-led forums working alongside government to reform the laws, standardize processes and systems, test those systems, and then implement those with the wider business community. And that's how we feel we will get scale. So super exciting. And that's really ultimately what the Centre is all about. We're there to help work with anybody. We're open-minded, as long as everyone else signs up to the same basic principles of open systems, interoperable standards, agnostic to technology solutions. I say, let's just go for it. And if we can be helpful, then we're happy to do so.
Wonderful, Chris. It was a great presentation, by the way, David and Chris. So I'll leave it to the audience today to make questions. I encourage you to post questions in the chat. You say, yes, there are so many things to clarify. Oh, here's one question from, hang on, Jose. Hang on, just forgot my glasses.
I can answer that to some degree.
Yeah, what do you presume will be the cost implications for the SME in the trade network to change to an EBL structure, and what interoperability will be available to connect with the existing technology to lower costs?
That's a really, really good question. So actually that in a way comes at the next stage. What we've done is the macro business cases. So if you look at the UK, for instance, this exercise of digitalization of commercial trade documents is worth 225 billion in efficiency savings, 25 billion in SME trade growth, an extra billion in trade finance, an 80% cut in trade transaction costs, and a cut from 25 days to 1 day in cross-border compliance processing time. So we know the macro benefits are there. We know obviously there's an investment from all companies in order to achieve this, but we think the investment is a fraction of the economic benefit. Now, what we don't know yet until we've delivered the pilots really is how those large economic numbers break down to SME level. What does that mean for an SME, in terms of investment versus benefit? What we definitely know is there are clear efficiency savings on the bottom line and clearly simpler ways of doing this. I suspect that for larger companies, this is about fairly complex IT systems, global value chains, and doing this at scale. Whereas for SMEs, it's probably more likely about outsourcing it to technology providers who are in the market. Technology provision, by the way, solutions are not the problem here. We've got quite a lot already in the market, at least 10 plus, who are very experienced in the transactions of these documents in digital form already. And probably the easiest solution for SMEs is just to use those existing providers, rather than get into the kind of IT engineering that the larger companies and banks and those kind of entities are likely to get into. So I think that's probably where we're going to go. But we'll see over the coming months and years how that's going to play out in the SME market. But it's a great question.
And these pilots are going to give us an awful lot of information. The stage we need to get to is to have a package where we can explain to SMEs where they will benefit, what the issues are, how they can make these things interoperable. At the moment, we have different silos out there, different solutions out there, and the SMEs are not really benefiting from these. The large companies are, the SMEs aren't. And we need to find out exactly where it is. And Chris has hit on the right points here. What is it that benefits the SME? What we need to do is to help them. And we haven't yet got to that stage, I don't think. But these pilots are going to take us a long way there, I'd say.
Yeah, it's worth looking at the Commonwealth did a really interesting study, and that answers the second question to some degree, as well around developing countries or emerging economies. But if you look at the Commonwealth study on digitalization of commercial documents, they go into quite a lot of detail. The two clear beneficiaries of this whole exercise who benefit the most are SMEs and small economies, simply because the pain is larger and disproportionately higher for those two groups. Sometimes the cost of trade is simply bigger than the value of trade. It's just not worth trading because the cost of it is just too great. And that's exactly the rationale as to why we need to drive down on that cost so that more SMEs can participate in the trading system, because we know the opportunities are there to grow. But if companies or countries can't access those opportunities simply because of cost, that's crazy, when we know there are solutions to help us do that. I think in terms of how to access blockchain technology and shared ledger, there are lots of providers out there who are truly global. They're not jurisdiction based. If you want help, then ICC certainly knows pretty much all of them. We know pretty much all of them in the global space, but there are definitely solutions out there in the market, and anybody can access those solutions. There's no jurisdictional restrictions on that whatsoever. I would encourage you to get in touch and start that conversation for sure.
I mean, but certainly in the ICC UK, at the centre that Chris is talking about, and at the ICC HQ, where we have a commercialisation group for digital trade, we are in contact with all of these technology initiatives. In fact, the CEOs of many of these initiatives are ICC members. So yeah, we have an enormous amount of information available to us.
Yeah, it's a great community. Just going on to Sophia's question, that's a good question. So there are actually quite a lot of pilots going on. The DSI will become the repository because one thing we're clear about is that we need to be able to share these pilots, because it is very difficult to find what pilots are happening, what was the result, where's the findings. It's really difficult, even for those who are actually in the space. So the long-term goal here is that the DSI becomes that repository. We can all access the information. There are a number of them that have happened. Singapore have tested with a range of countries, including Australia, in the Asia space. They're currently testing and piloting with China. Thailand are testing with Japan and Singapore. There's a number of banks and shippers, insurers are all testing with the Digital Container Shipping Association at the moment. You've got some of the banks doing separate testing and piloting on things like electronic bills of exchange. And then our pilots will start towards the end of the year from the UK to Singapore. And then there will be a plethora of those coming next year in 2024. And what we're hoping is all of that information goes into one place so you can all see it, read it, learn from it, and we can use it together as a collective community.
Yeah, and Sophia, right, in the Q&A, I've actually added the link to DSI for you to have a look at. So I do recommend you take a look at that website.
Yeah, the repository is not yet. We're busy gathering up the information ourselves and hunting it out. So, and some of those pilots are ongoing, so that the information actually isn't readily available to the market just yet. There has also been a terrific amount of work in the ASEAN with the likes of Thailand, with UK support and Japanese support, interestingly, government support. They've got a ton of information on exactly what the cost benefits and wider efficiency benefits are. It's just not yet public information. So that's what we're working on so we can all see it. But when you see the numbers, there's just no question to argue with what this is all about. It's huge. The gains are enormous.
I think you have already answered the second question, chat, Chris. It's the house and me.
Is that yeah, is that Arjun? Yeah, Said's or Saad Armin's question.
Yes.
Yeah, I hope I've answered that. I'm just looking at Arjun Balu's question here.
Yes, digitalization, we're heavily reliant. Hang on, let me expand this one.
That's an interesting question, Dave. You may want to jump in on here. So we're technology agnostic. There's lots of different frameworks and approaches to this. Interesting, obviously, blockchain is a major technology solution. There's no question about that. We're a lot further down the blockchain road than we were, not that long ago, actually, when there was just, a lack of understanding of what this technology type of platforms were all about. But we are interestingly seeing different non-blockchain solution providers coming onto the market. So we're watching that very, very closely. ultimately, we're not wedding ourselves to any technology. There's bound to be new solutions coming out. And it may well be there is a variety of different technology platforms and solutions out there in the longer term. I would just use the opportunity here to talk about trade trust in Singapore. That's a very misunderstood kind of initiative. The Singaporeans, to their credit, have been around all of this landscape for probably longer than any of us, and very, very technically capable and expert. They are developing a framework. It's not a platform, it's not a technology, it's a framework for public good that allows for the transfer of these commercial trade documents in a safe, secure space. It's in incubation stage at the moment. They're testing different blockchain solutions, but they've got the latest testing has actually brought the cost of a transaction of an EBL, electronic bills of lading, down to 5 cents per transaction. It's an enormous reduction in cost. So that's a framework to watch. The long-term idea is that spins out of the Singapore government and into a neutral entity so that everybody can use it and it can scale, but it's not quite there yet. It's still an incubation testing phase.
Yeah, and we're looking for partnerships, by the way. Last year, we had a wonderful speech by Luca Castellani of Uncitral together with Brand UK, Hyperledger Trade Financing, which I'm chairing. So what we understood, okay, it's still the infancy, but we want to go great, we want to go global. So looking for different solutions provided. And as you said, Chris, it's the right choice to be agnostic in terms of technology, because trade is a team sport. So any technology is straight from the picture, and it's more than welcome. Each of them carrying out a specific job within a larger picture. So indeed, this is a perfect choice, and perfect choice otherwise to go see for UK, go looking at what's happening in Singapore. We all know what we have an idea what's going on in this part of the world in Singapore. And they're achieving, by the way, so it's great to know that. This is a question, by the way, Chris, leading on to you, whether you want to answer. This is a question of hierarchy of global law. It's anonymous, by the way, so I cannot tell you who made it.
What's the question, sorry?
It's the last one, I guess, in the chat, if you look at that. When the UK released the English law update that recognizes DLT and digital assets with the utility for global trade, will the US Securities and Exchange Commission have to accept those laws? And does the SEC government have more power than English law? Strange question.
That's an interesting question. So when we first started getting into it, here's a bit of a red herring, and I think we have to be very cautious around this, because there are big issues coming down the road at us. One of those is digital currencies and assets. That is a much bigger conversation. Some of that's highly political as well. We made a very conscious decision that when we partnered up with the Law Commission here in England and Wales, they were actually working on a big piece of legislation around digital currencies and assets, and still are actually consulting on that. And the idea was that the electronic trade documents was sort of part of that conversation. We agreed specifically to decouple the two, because we know that if we're in the digital currencies and assets discussion, that's going to go on for well over a year, if not several years, because of its political nature. So we actually chose to say, let's do the electronic trade documents bill first, because that's much easier. There's really no opposition to it. Let's get that done. Let's not hold up the trade ecosystem. But we definitely need to engage constructively around that digital currencies and assets question, because some of that is quite difficult, genuinely difficult, with lots of different complexities. So it does need a lot more debate. So that's kind of where we are. And I suspect others will have to have those similar sorts of conversations in their own jurisdictions. Who takes precedence? Well, in a way, Melita is the framework. Our job at national level is not to have competing legal systems. That's the whole point of Melita. It is the global legal framework. Our job at national level is to either adopt Melita if you can, and if you're a small economy, you're probably going to be able to do that, like Bahrain. But for the bigger economies, the pattern is that nobody seems to be able to adopt it, because our systems are very, very complex. And that's exactly what you've seen in the US and the UK, and pretty much, well, actually, I can tell you now, all the G7 are having that challenge. So our job, therefore, is the second best option, is to align our systems to Melita. But the whole point of this is that there is no conflict. These documents should be able to just transfer across jurisdictions because a Melita enables that to happen. All of this will play out, of course, when the pilots start, because that's part of the job of the pilots, is to test this works, right? And then prove to the market it's tested, it works, it's operational, go for it.
Thanks, Chris. By the way, there's one question from my friend John Taylor, professor at Queen's University. So he's asking, global law reform would be needed to align with Melita, as you currently emphasized. What types of support are available needed to achieve this? That's also a very good question, by the way.
Hi, John. I think it's John, as in John, who's working with us as well, I think, here.
Yeah.
Yeah, I mean, this is, this is a great question. So the problem we have, frankly, is that laws are different in most countries. Obviously, there's commonality in places like the Commonwealth and also in other jurisdictions like Francophonie and other types of countries. But ultimately, it's the responsibility and the competence of national government. Even in the EU, that's the same issue, actually. And that's the challenge in the EU, actually. There is no pan-EU solution, and that's what they're wrestling with, because national law reform is a national competence for national governments. So that means, I'm afraid, it's slightly painful, and we have to go one country at a time, working with governments, walking governments through the problem. The good news is that we are learning very fast how to do this. In the UK, like I said before, it's taken us 4 to 5 years to get to a point where legislation is coming into Parliament. I don't think that's necessary at all. I think you can do the whole thing, all the preparation and the legislation in 18 months, simply because we know exactly where to go hunting in the legislation frameworks of most countries. And of course, that's the opportunity. If we get commitments within the likes of the WTO e-commerce agreement, then obviously that's going to accelerate the whole conversation, because we're going to get multiple governments who are going to do that preparation work hopefully quicker than it would be if we were going country by country. But the truth is, we have to engage and we have to work with our governments. One pattern we have seen pretty much everywhere, actually, is that there is no department in government responsible for this area. So there's different departmental interests like transport, customs, trade, economy ministries. And the number one challenge is who is responsible, who's going to put their hand up to do this work. And that can take longer than you think. In our case, we were lucky. The Department for Digital put their hand up and said, we'll do it. And that's where we are. But I know lots of other countries are struggling with that. So that's actually a really, really important part of the challenge, is to identify where this sits, because it's out of sight of governments. I think that's, from everything I've seen, every conversation I've had with governments, I think they just got a blind spot. And if you track back to 2013, when the World Trade Organization Trade Facilitation Agreement was put in place, all of this was missed. And I think one of the reasons it was missed, because governments just saw customs, trade facilitation, because they do that every day of the week. And they totally missed this commercial element of the transactional space, which actually I would argue is more important. It's the bigger end of the space, but it's not within their line of sight. And so that's why we need industry groups to drive at governments. They struggle if they haven't got industry engaged alongside. And you can see that in the G7. The ones who are moving faster are the ones with the highly engaged industry working groups, helping guide governments to the issue, the solution, and then from there, governments can take it on. Those who don't have that are the ones who are the slowest. And that will probably play out at global level. So, encourage industry to own it, get engaged, work with government, because we can only do this if we work together.
At a lower level as well, Chris, it's worth mentioning on the support side, the interaction between ICC national committees. There's a lot of information being shared between us, especially from the UK and Germany. I know that too, I talk to a lot, but there is a lot of information being shared among national committees.
Yeah, we've got a great sort of little community of us who are all working very, very closely, especially in the G7 group, but UK, France, Germany in particular. We're all highly collaborative. I think this is a fantastic opportunity for ICC, because ICC is naturally neutral. But I think ultimately it will vary a little bit by country. In the US, it's BAFT. In Singapore, it's actually a government agency, IMDA. Same in Thailand, ETDA. It doesn't really matter, to be honest with you, as long as somebody is putting their hand up to be the convener to bring all the parties to the table. If that doesn't happen, things either don't happen or they move incredibly slowly, and that's not necessary. But I would agree that ICC is a fantastic place to start. The banking community, by the way, is pretty much driving this in every country. That's also interesting. It's usually the bankers who bring it to the table. It certainly was for us and pretty much everywhere else I've seen. So that community is actually really, really important. They can mobilize a terrific amount of resource to get the snowball moving, and then bring in all the other players, the ports, the insurers, the logistics, transport, and everybody else who needs to be involved in this conversation.
That's great conversation, by the way, Chris. I would like to conclude this meeting by bringing the discussion a little backwards from the start to the technology, by the way, side of the discussion. You were right. There's an abundance nowadays of offer in terms of technology. I've seen this all through the last years. Some are doing well, some are lagging behind, but the offer is all there. So we've seen recently a rise in a number of initiatives stating, hey, we are URDTT compliant. What's the problem by the ICC in those terms? What are the steps to go through compliance in terms of URDTT?
That's a super question. That's a really good question. So we're working on that right now. Actually, is there a means for us to help the market so that you don't have to try and figure it out for yourself? We can say these are the ones that are actually certified in the market. These are the proven solutions providers. It is difficult because the market, the trade tech market, as I call it, because it's fintech, law tech, reg tech, you name it, they're popping up all over the place. Insurtech, is on fire, and that means there's enormous amount of companies coming onto the market almost every week, popping up. But it is dynamic and it's innovative, it's entrepreneurial. So some succeed, some don't, and that's very difficult for companies to navigate. So I think there is a need for some help. At the moment, what we're saying is, look, it's not official, but there is actually a list of companies, tech solution providers who are certified or at least approved by the marine insurers. And that group is disproportionately more influential on the system. If they don't insure, it's not happening. I mean, well, it's not quite like that, but you get the point. And there is actually a pretty weighty group of tech solutions providers who are already approved by the marine insurers, the P&I clubs as they're called. So that's certainly one to watch. But watch the space. We're going to try and help because we kind of know, well, we do know who's in the market. We're going to try and help in that space, to navigate it and find a provider quickly so you can get on with the job.
And a slight tangent to that, on the commercialization group, we're also looking at or talking to tech companies that are using the uniform digital trade, your rules for digital trade transactions, or are incorporating it in their developments. And the idea will say that company X or company Y is compliant with the URDTT, for instance. Very early stage with that, but it's a way forward to help people.
Yeah, there's a whole bunch of things here. I mean, I think at the end of the day, what we'd like to see is really sort of more demand for that compliance. Are you URDTT compliant? Are you MLETR compliant? Are you compliant with the standards toolkit? There are multiple ways of doing that. And you're starting to see that LEIs are part of this, the legal entity identifier. You're starting to see banks say, you must have an LEI to be a client of the bank. We'd like to kind of build on that. So could top tier companies do it with their supply chains, for instance? That needs to come from the market, and that needs awareness, all the benefits to filter through. And then it kind of makes sense that becomes just part of the conversation, that you need to demonstrate that you can comply. ISO is an important part of this as well. They're also part of the conversation, by the way. So, their standards linking to the WTO ICC standards is already happening, that discussion.
Thanks, Chris. Thanks, Dave. That's a very interesting conversation, by the way, and I love your approach, which I find harmonizing and agnostic, which in my most opinion is the right way to go through in trade tech, because I also use the term trade tech, distinguishing it from fintech. I'm often say, yeah, are you dealing with fintech? No, actually, I'm dealing with trade tech because we're talking about trade and trade finance. So there's some kind of a world apart, but not too much. So we have exceeded actually the hour. Thank you for being so generous in terms of details. I give back the keys to the meeting to my colleague and my friend Eric if he wants to add something to close it down. Eric.
Thank you very much, gentlemen. It was a very informative session. I have a last comment and a very quick question. So my comments, and we've alluded a few times in this conversation, a bit before the call and during the call, on a certain generation, right? We come from a certain generation. We've seen our respective industries and our respective fields evolve over the last few decades. I remember 20 something years ago talking about e-bills of lading or e-airway bills. We've been talking about that for forever and ever, but the enthusiasm that we're seeing today around digitization of all these trade documents is finally catching up to us, and that's very exciting. So thank you very much for your efforts as well around that. And my last question, and this one is for you, David. You don't really have to answer it, but you seem to be losing your voice there for a second. Does that mean, this is the question, does that mean that you will not be singing a Smith song for us today?
I would have loved to, Eric, but yeah, as you hear,
please do, Dave. Please do, Dave. I'll pay you. If you do, please.
We'll give you a pass on this one.
By the way, in a separate session, I'll suggest you the one. I know Eric is gonna scream against me, but I don't care.
Just on the first question, I mean, I think we've had a bit of luck. Let's be honest. I mean, COVID obviously has been horrific for many people, but it's put rocket boosters under this agenda, and then the economic crisis, which is coming from all directions in many different forms, whether it's war or whatever, is also putting rocket boosters, because effectively, governments don't have a lot of public finance in the bank, and they're looking to drive economic growth. Countries like the UK are going into recession, quite likely. There's a lot going on in that economic space that it's pretty grim. So anyone who's got low cost, high return solutions for governments, which this is absolutely one of them, then that's highly attractive. And that, of course, is part of what's going on here. Why do we confident we can get 100 countries to commit? Surprise, surprise, it's the same kind of argument. So we've had a little bit of luck. Sustainability is also a huge part of this, massive momentum around that agenda. But how do you deliver a sustainable trade system if we're all shuffling bits of paper? You can't, is the truth, because you can't get the data in real time, at scale. The only way you do that is go digital. The data then comes into the system. We can all see it. It's transparent, and then you can make informed decisions. So, there are multiple drivers, and that's been incredibly helpful, let's be frank, on the digitalization agenda. And I think we've all benefited as a result.
It was a sparkle, actually. When I started out my activity within the Haberledge family, we started from COVID outburst, because we understood the necessity of going digital, not only for trade finance, generally. You cannot extract from a paper sheet data, but you can from records. So that's literally the new will that can spur absolutely a new world, a new way of doing things in general, in a holistic, harmonizing, seamless, and I would love to stress this term, way. And that's, by the way, Eric and I, we've been focusing this last year massively on sustainability. We had Thomas Kubiak of ICC Paris with us talking about the sustainability program in the ICC. So it's nice to hear all those topics entwined together and strictly connected.
These new digital ways, I mean, with current and future generations, it's going to get quicker and easier. We're of a generation where what I've seen described as digital immigrants, but they are digital natives. They're brought up on it. So they're going to accept this far more easily than we've been.
Well, speak for yourself. But yeah, no, I totally agree with that. That's a really important point, actually, because Dave made a really good point earlier on around this kind of inertia. let's not forget the next generation. They don't want anything to do with this paper. It makes absolutely no sense whatsoever. They don't want to go into careers shuffling bits of paper around whatever the organization is. They want to use technology. They want to get into that exciting new innovation area. So, the future is 100% not paper. And anyone who's sort of arguing for paper is crazy, because that's just not where people are at. And quite rightly so. We can do this so much better and quicker and faster.
We've been wasting energy, we've been wasting time, we've been wasting resources for far too long in our industry. So let's move on to something else.
I subscribe 100% to this, by the way, and you know why, Eric. We're in all this together. So thanks, Chris. Thanks, Dave, once again for being with us. Looking forward to more talks like this. It was really insightful, exciting session for us. So thanks for being with us today.
Thanks for inviting us. Thoroughly enjoyed it.
Yeah, appreciate it. Thank you.
Thank you, everyone. So again, a reminder that we'll email everybody out in a few days about the David's slides. Thank you very much. And the recording link to our YouTube channel. Subscribe to our YouTube channel if you want to see more. And again, gentlemen, thank you very much. Have a great rest of your day.
Bye, everyone.